Good turnaround Tuesday, Warriors. Who's ready for reversals? Who's ready for continuation? Who's ready for a range? That's right. Be ready for all of them. How you doing, Ingmar? Steve, AJ? Hi, Blake. Let's see. Mike, how are you? Brand, how are you? Ryan, welcome. Brand's on the sky. Okay. Okay, everyone's ready. Okay. Hi, Kurt, James, Paul Nash, everybody. How you doing, Hugo? Okay, let's go to work. Know that Ryan's with me here.
Morning, sir.
Hey, buddy, you're loud.
Oh, am I? Should I whisper?
Well, no, it's all right. It's good to hear you loud or quiet, whatever it is. So good to have you. My leading question would be, I had a 1780 number, where there could be a count where that's it in euro. Can you come up with a narrative that maybe these highs at 1780 might be it, or should we be buying this pullback in euro here for a move to 120? That's a
If
big
you,
question.
yeah, if you click your 4 hour button, you'll see why we ran into trouble up here. Oh no, maybe you scroll it back a bit further. There we
Up
go.
here.
Yeah,
Yeah.
up here, and just before that as well, when we had that move up. Yeah, so pretty much there.
Yeah.
That's the reason we've run into trouble up here. Is this a pullback? I was maybe thinking about buying it at 117.50 because that's a bit of a level off those prior tops, but I haven't. I think what we've got here is just pushing another decent level, and knowing that we've got big news coming. So this is the market saying, okay, we don't want to take it too far and get caught on the wrong side.
You're talking ECB, right?
Well, we've got the jobs revisions coming up in a couple of hours
Oh,
for
okay.
the
Yeah.
NFP, and then we've
Yeah.
got PPI tomorrow, CPI Thursday, ECB. So I think you know what it's like with markets, Dale. They get to a point where they go, all right, we just need to take a foot off of gas for a minute.
Yeah.
We don't want to get too far out of our pram. So I think, yeah, into the 117.80, your level bang on the
Yeah.
nail.
Yeah.
Up into 118, the prior highs, I think, until we get some of this data. Those are the sort of levels we may hold
I mean,
outside.
we're so close to cleaning out the stops here at 1830.
Yeah, yeah.
But
May
it's
happen. It
possible.
may still happen. It may still
Yeah.
happen.
Yeah. And what the new thing is that it may not.
Yeah.
The fact that when I woke up, I've had 1780 in my head for a while. It's either 1780 or 1980. So, I mean, this is a big level. If it could get through it, probably has another couple hundred pips in it, which would take the Dixie back down to 95 and making new lows.
Yeah.
So,
But this is why this month, these first couple of weeks, September, are going to be such a pivotal moment, because it's going to define whether the euro probably goes to 120 or goes to 115.
yeah,
It's that big. So
it
what you're going
feels
to do?
that way to me.
You're going to be jumping in the water trying to nick 5-10 pips here when you might get a 200 pip move. It's and that's how the market
Yeah.
thinks as well. Does it want to really mess around now, or does it want to try and capture some of the big move?
Because I know it after last week, it had me convinced that new lows were a layup. And then I look at this action and I go, I'm with the crowd if I believe that. The
Yeah,
crowd believes new lows in the dollar, it's a done deal, right? I mean, that's a way, that's a kind of vibe I'm getting from people who make commentary on FX that
I,
the
I,
dollar
I
is,
agree. Well,
yeah,
it's never a done deal, but I think it's
yeah,
it's probably an 80-85% chance that the dollar heads lower, then goes higher after the
yeah.
FOMC once we're over the FOMC.
Okay. All right. So you think it'll be under these lows going into the F or take them out after the FOMC?
Um, Depends what the data does in the meantime.
Yeah.
That's why it's so important. You know, if PPI falls off a cliff and CPI falls off a cliff, yeah, you're probably going to see your 95 before the Fed. If it's just a little bit softer, it's all about the market wanting to see what the Fed's going to do. And I don't want to labour the point, but I made the point on the show, Flow showing in the room. The dots for next year have a medium of 3.5 to 3.75%. Okay, so take the midpoint, 3.62. If we have 3 cuts the rest of this year, we're at that level already. So what are rates going to do next year? If the Feds think they're going to be at 3.5, 3.7, then they're already there by December, then where are rates going to go? They're going to have to come lower.
I think the market's looking at a 3% rate
Right. So
coming, right?
we've got to get a reprice. As sure as
Right.
hell, we've got to get a reprice, and it's already started. So the FOMC, the market wants to know, is 3% the level? Is 3.25% the level? Is 2.5 the level? That's what it needs confirmation of, and
Okay.
that's why it will do its sort of final big reprice once it knows that, and then we move on. So yeah, it's all leading up to that.
Okay. So just to temper interest rate dovishness, if you recall Gregor's visit here last week, and for a while he had formation completing at about 4% before the next wave up in yields. So just something that, you know, we're going to be there before the dollar would bottom. So, you know, they're a little bit out of sync, but I don't know how much you press this. You have to give the breakout in TLT the benefit of the doubt. You know, talked about this ascending triangle last week. Blake told people not to be bearish down here. I mean, this looks like a breakaway gap
Yeah.
that we had yesterday, a little lower. So at least now, you know where you're wrong. This actually measures up to about 93. It's a 5-handle formation. So
But you
this is
can't chase it here, can you?
no, I can't
No.
chase
And
bonds.
I'm in the same boat. 3 times yesterday, I looked at dollar yen between Sunday night and yesterday. I looked at dollar yen and thought, I need to sell this, I need to sell this, and I didn't.
Yeah,
And here it is, 200 pips
same
lower.
same here. What a gift that gap higher opening was
Yeah,
Sunday night. What a gift
but
right here.
we can't trade backwards. So what
Hey,
I'm
that's
what
right.
I'm what I
Good
know
one.
now is that I have to go into a bit of a hope trade, which I don't like doing because hope's not a strategy. And if we get hot PPI and hot CPI, we're going to get a rally in the dollar, and that's probably what I'm going to look to hit now.
Okay. All right. Uh, just a quick 35, 36, 80 is a target. We're at 53. And the last couple days, silver's dogging it. Silver looks like it's setting up a top. It could still go 42. It's all going to depend on, I mean, if the dollar's going to 95, you would think metals would have more legs, but gold's approaching objectives. So it's like certain things are out of sync when I'm looking at the board right now.
Yeah,
Um,
but this
uh,
is another big break in gold, isn't it? I mean, it's done what $100 in
yeah,
what four working sessions.
yeah. Since the
You know,
beginning of the month, 300.
yeah.
Yeah,
So
yeah,
that's a big move. That's a big
yeah.
move.
It's huge move. Huge move. And the gold silver ratio, which I was ignoring, usually, you know, trades with the dollar, but this is much stronger than the dollar is. So, right there, there's another correlation that it seems like they detach, but then they pick up quickly. Like, you know, last week we were saying the yen isn't following yields with yields dropping.
Yeah, yeah,
But you know, 3 days later it did. You know,
yeah.
so uh, Yeah, I mean, you can't forget about the correlations, but seems like they're disconnecting for a little bit and then making up for lost ground in a hurry.
Yeah,
That's why it feels to me.
yeah. I think a lot of that strong correlation was purely the summer because nothing much is going on. So the correlation strengthens because people are looking for reasons to trade. Oh, the yields are moving, so the dollar must be moving, so we'll trade that way, and then it goes the other way, or we'll trade that way, and ranges develop and ranges hold. We've come into the month last week, end of the summer, and bosh, we're up and running. Volatility's up. We've got big
Um,
events. We've got NFPs. Everything's back, and that's why you get the breakdowns in correlation because everyone's looking at what rates are going to do, what's Trump going to do, what's the ECB going to do, and what's the Bank of Japan going to do. We've got a bombshell dropped this morning that they're looking at a hike
yeah,
by the end of the year. So bang, the yen, the Monday night, Sunday night, people are looking for 150, 150 plus over the Ashiba thing, and
yeah,
now we're trading down to 146.
yeah. It's interesting. Nat gas still acting okay. Due for a correction. If you have one, you know, say just adjust the fibs and buy 50% pullbacks if you get them. That'd be around 290, a little under three if it pulls back. And the S&Ps, they've tried to break them, but when I look at this, just this action right here, and I could see how it could very easily take out this high, but it could also just as easily, with one bad candle, take it lower. Anyway, I'm trying it with stops over the high for a turnaround Tuesday trade. We'll see how that works out. And any other market catching your interest today that we should be talking about? The euro pound, you have a view here? Is this
That's
a dip to buy?
that's back in snail mode.
Uh,
Back,
yeah, uh,
back in the middle. But Aussie dollar, Kiwi,
yeah,
they're looking the same as the euro. Aussie dollar breaking back into 66.
yeah,
Have we topped out at 20s? Yeah, we topped out at 20s. Which again, if you look back a little bit,
yeah,
the last break we had above 66 topped out at 20s. So that's
right,
the same as euro dollar topping out at 117.80. We've got these levels. The market doesn't want to push things too far.
yeah.
We could be at 67, 68, or back at 64, depending on what happens this week and into the Fed. So it's
And it all kicks off. And good morning, guys. It all
Good
kicks off
guy.
like literally at 10 o'clock
yeah,
as we get these revisions, because it's going to be bam, 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 right? It's going to be the revisions today. It's going to be inflation, CPI tomorrow, producer prices on Thursday, or actually, I
other
take
way.
that back. It's
Yeah, other way.
PPI Wednesday, CPI on Thursday. It's usually
Yeah,
the other way around. Do
yeah, that's
you,
right. It's a wonky one this month.
it is.
Uh,
It's weird. It's had me off kilter all week. I'm like, wait a second, we get PPI beforehand. Anyway, it's just one after the other, which is either going to give us a crap ton of volatility as far as the dollar goes, or we're going to see the dollar really, really sell off. It could start with today and then really follow through for the remainder of the week, or we could get a nasty reversal. And it all starts with today, I think.
I just wanted to show Ryan, I love confluence that are completely unrelated,
Yeah,
like a fib count, an extension count, whatever it is. And then coincidentally, a moving average, which is a weekly 200. I've been talking about 6680, and now that's where the 2 week, the 200 week moving averages.
yeah,
So that's
that's a
going to
big one.
be huge barrier, and I think there are also technical levels there, and that's why I had 680 in my head for a while. So,
Yeah,
um,
I've got a bit of a level at 66.90.
oh, okay,
So that matches. Like you say, confluence is the best thing to trade when
it
you're looking at
is.
the text.
Yeah, okay. Good morning, Blake.
Good
Uh, so
morning.
what? So what are we going to do about the dollar here? You have a bias. Still think that 120 is still viable if if we get through today's highs, take out 1830?
Well, as far as the dollar goes, so I updated this chart just a little while ago. Let me get over to it. And I think this is pretty critical where we're at today, because we're at, obviously we're at the 78% retracement. We're at 127% extension of the last move higher. We're at channel support. So there's a lot of support where we're at. Which if you're, shorting the euro, you just, you stay short the euro as long as it doesn't break, into 118s. And Dale, when you said earlier, you're like 118 or 117.80 or 119.80. I agree with both of your, your levels.
Yeah,
The reason why I say that, and we've been looking at this chart for a long time, you know exactly what chart I'm about ready to
yeah,
pull. This is a Gartley pattern. So the question is, do we, stop here at our first initial, this red trend line? I'll go out to a weekly chart to give us a better view here. Are we stopping at this trend line, or are we stopping at, this one up here, which is 120 basically? So, whether we get to 120 or we stop up right where we're at has more to do with the data that comes out this week. And you can,
Coin
you guys can
tosses.
flip a coin. Yeah, you guys can flip a coin and say, "Oh, I was right," and sure, okay, fine. But really, why we go up there is dependent on the data that you and I don't have at this moment. And we're going to have the data after today, tomorrow, and Friday, because it's going to set the pace for how the market's going to interpret, or what Ryan was saying a little bit earlier, price in what the Fed's going to be doing and what they're thinking. And I've told our traders during the morning edge and daily roundup, and I want you guys to kind of know where my head's at regarding this. What I hope happens over the course of the next couple of days and into next week is we do have some weak, jobs data today, like the revisions. Let's say, oh, Ryan, what is the upper end of the revisions? I know Michael Brown posted in our chat room for he posted like what the data was yesterday. I remember the low end was 250,000. The high end was a million. I can't remember.
Yeah, it's a bit flaky, okay, because it really is just
Sure,
wet fingers in the air.
sure,
I
of
think
course.
we've got it on. Yeah, we haven't got any expectations like on the calendars or anything like that.
No. This is some Bloomberg expectations, and I have to
Seven
go back
hundred
and look at.
thousand on Bloomberg, or minus 700,000 on Bloomberg.
Yeah, but that's a median. What was the high end and low end expectation? Do you remember that?
I don't know.
I'm trying to go back and look at it from yesterday. Sorry, guys. I'm in the general chat room and just keep scrolling back and scrolling back and
I mean,
trying.
it doesn't really matter. I mean, this is old data, okay? So it's from 2024 through
Yeah.
2025.
Yeah. Okay.
But because the market is now so laser focused on jobs, if the jobs picture in the whole of that year is worse than what we've been led to believe, the market's going to hammer it because that's what it's going to do. And even if it's not as bad, it doesn't matter because the market's still dovish over the Fed, and it's not going to change. So again, any rally in the dollar, because the number's better than expected, is probably a rally that's going to get smashed.
Yeah. Okay. So I want to just tell everybody what my expectations are. I hope that the data is not great. So I hope where there's 800,000 job revisions, they smack the dollar. The euro starts to break higher. Then we get inflation data that is not the next couple of days that's in line, softish, so people go, oh shit, the Fed can actually cut rates by 50 basis points. And Dale, this is where it comes up to our like your plan and what I'm thinking here too. If we can make it our way up towards 119.50 and then hit this resistance, because on the week ahead video, if you remember, for the last 2 weeks I've been saying if we see 119.50, I want to sell it, because that's the best risk reward we're going to get ahead of the 120 level, or if we see 120 obviously. But then we go into next week, and then the Fed is probably going to deliver us 25 basis points, but the market's going to be pricing in the risks of, or the heightened risk of a 50 basis point. And then when we don't get a 50 basis point cut, we only get 25. I think that's when you buy the dollar. I mean, that's when the dollar takes off. So in other words, I'm hoping we get to 119, 119.50. And then I'm going to start looking for a reversal up there. That's how I'm viewing it over the next couple of weeks. That's my plan. So Dale, that just to illustrate to you, so I think your numbers, what you're talking about is 117.80, 119.80. Those all fit the narrative if it all plays out in that fashion, which I think is a risk over the next couple of days or next week. So
that'd be a major inflection point because I'm expecting a pretty good completion of this rally we've had from 102.
Right.
So we're at a major, and it's two scenarios. So if you have FOMO or just fear of missing the top, you could try it in here and get out where everyone else will over 1830, and then recommit at higher levels. Go in light, have a piece on if you're a Euro bear. You know where to get out of the way. You know your risk. It's 90 pips from here. Maybe finesse a better entry for a tighter stop. But then if that doesn't work, it's next. And you play the second scenario because Blake and I and everyone but God doesn't know which one's going to be the one, right?
Yeah, we don't.
So we don't. So, can trade it and find out. And, sometimes you have to be, I don't know, this is important, and I want to bring Ryan into this. So you have conviction about a trade, but you're right the market wrong the trade for a while. And you take little nicks, you get out. But the most important thing is, because I did the opposite for many years in my career, is that you get frustrated and you just start looking elsewhere. Even though your conviction is still there, you have to be persistent. And that includes after taking losses, if you still have conviction and technical backing or a good case for still having that idea. So I want to know how you, Brian, you overcome, maybe you have an idea for a swing and you're trying to get positioned and you lose 50 pips before it. How do you stick with that trade and not say, well, I'm just not going to trade the end for a while?
I've got the perfect example for you, Dale, and that's in Aussie Kiwi, where I'm short, and my first short was 110.65, which I'm well offside on, and I'm short up the top because my plan is to trade the near 11-year range, okay, the edges of the range. So it doesn't matter what happens in between. I watched this pair. I could have been long this pair and probably made double the money so far, because it looked like it was going up. It's strong. It's still looking very strong. I know one of our chat room guys, Mark, he was long it and running it. I knew it was going up, but my plan is to trade against some of these big wide edges the same as I did last year. So if I know I've got conviction in a trade, but I know the market may not play ball straight away, I take my risk down. I acknowledge that I am, to play a longer term trade, I'm fighting what's potentially a shorter term trend. So I take my risk down. I do smaller pieces. That way, I don't have to take too many punches in the gut, because I keep my risk small. I can wear going offside because it's still conforming to my trade. What I don't want to be doing is going full size at the start and then going offside, getting stopped, then trying it again, going offside and getting stopped, because then you've got to make all that back before you even start making a profit. So you can have strong conviction.
That's a better answer than I had, because I'm that guy. I'm never all in anymore. I've done it, and it's painful.
Yeah.
So
no one should be ever all in. Never should anyone be ever all in.
So here again, we come down to the money management aspect is reduce leverage.
Yeah.
Okay. So, there are people that trade FX with no leverage and they make a lot of money.
Yeah.
They make, they get these 4 or 5% moves that happen in a month or so. They have no leverage, so they're never under huge pressure. So reduce leverage. It
Liberating.
will.
It's liberating.
I love that word. It's
Yeah.
Liberation Day. And we all love Liberation Days when we're short S&Ps. So
Right.
anyway, go ahead, buddy. Take it
So
away.
yeah, Ryan, great mapping out of on the Aussie Kiwi, or maybe you can just make it easy and say I saw Blake on the trade-off show with Chris Weston, and it was one of his trades of the
Yeah,
day.
I'm just
I'm just
copying
kidding,
Blake.
Ryan.
That too.
I'm just kidding. Well, it's funny. I was short the Aussie Kiwi up here. I already closed it, and I haven't been able to get an entry back in, which sucks because I do want to be short with you. I just it's not giving me that entry after getting out. I've been trying to sell it back in the 30s like all since last Friday. Anyway, couple other things we should probably go over is obviously, you see the euro, we've talked about the euro. Sterling's up at 136 installed right at the top of the resistance zone. I mean, that's pretty important to understand that it is stalling up here. Ryan, you mentioned that the Aussie's back at the 66 cent level. This is a key level of resistance. I'm playing the Aussie on the short side up here just because I know this is a resistance from 2013. But one of the things about the Aussie is if it breaks out, it's going to break out. I mean, if we get much above 66.30, it's going to be serious breakout, but we're not there yet. It's not doing it yet. But it is probing pretty key resistance levels. Gold's obviously been a big mover. Just keep playing it in this range, this ascending channel. That's the ascending channel that we keep following. So just keep buying the dips into the channel support. Today you could get a dip to that channel support. Obviously we're overbought and divergent. So as we're making our way towards 37.29, which is the 161% extension. You just have to be a little bit more cautious on every rally. Every time we make another stab higher as we approach, the golden fib, you just got to be a little bit more cautious. So, buying dips is preferred while you're above 135. Crude oil has been really interesting because crude is really probing the 6150 level, and we hit it on, Friday, and I think if we break it, it's going to be downright ugly. And what else is really not impressing me is crypto, or at least Bitcoin. Bitcoin's still struggling up here. I mean, it's trading heavy based on what risk appetite's been doing. So I'm surprised Bitcoin is as weak as it has been.
How about back to the 200-day, like
Yeah,
103? I've heard that bandied about.
yeah, I would think so. And this is where it starts to get disappointing because you start getting below this breakout point here, these previous all-time highs, around the 108 level. Then you start to really, it becomes, how should I say, disheartening for anybody who's been crypto bull buying it, up in the 110s. That's when it starts to get gnarly, and more, it starts to weigh on it. And same with Ethereum too, because Ethereum just sitting on channel support. We break back below this 40, let's just call it 44,000, right? If you break below that, now you have all-time highs that are rejecting. Yeah, false breakout.
Wow, that'd be big.
And there's a lot of institutional money that's behind this Ethereum move. And that's all new money that right here, all the move from basically 4,000 to 4,700, that's new institutional money. So they're going to be caught off sides. We start trading back below 4,000. So you got to just keep that in mind, because if Bitcoin and Ethereum go down, so a lot of these altcoins are going to come under some pressure, I would assume. Hey, we have about a minute before Dale takes over for his interview. Ryan, I know you were looking around at some of the markets that you're thinking of. I personally like the euro sterling. I know you said it's right back in the middle of this triangle, which it is. But I still think that the euro sterling is going to break free. And I love the rejection of sterling at 136 today. So I'm liking it. I'm long, but I really think it breaks out to the upside sooner rather than later. Anything you're paying attention on today?
Well, I think you're going to be right. If we go to 119.80 euro, that's going to be the jet fuel for the euro pound to break out, maybe.
Maybe. I don't know. I thought might be
I'm taking
sterling.
I've been scalping S&Ps from the short side, and I always take 7 to 10 handles when I'm right for a while,
Yeah.
and then go BE stops, and it's been working, and I'm trying it again today. I just think that if you put up the S&Ps, Blake, this recovery we've had off the big red candle, I'm going to give the red candle a chance to that we had last Friday, a chance to be a high. You know, it could grind up and through, but it does. It looks more like a bounce to me than something that's just going to be impulsive. And maybe we get a wedge breakdown, which comes in around, I don't know, Friday's low,
Yeah,
or
maybe.
where's that wedge breakdown that if we had it? That
I
was a
would just,
false
I
breakdown.
think it's, yeah, the false breakdown. So it's these lows right here that come in around 30 or 63.50. Because once you
I
start breaking those lows, then you're making
there,
lower lows.
yeah.
You know
There's
what I mean?
something at 442 on a shorter time frame. I think that was Friday's lows. It's not, yeah, there. Taking that out and would also take out one of your wedge lines.
Yeah, yeah.
And then that would take it to 360, and that would be the nail in the coffin if they took it out
There
for
you go.
61 and a half or so. I'm not calling for a crash, but I think there could be a correction here. Nvidia tried to fight its way back yesterday, closed crummy. I still stand by where Nvidia goes, the market will go. Um, it can fight it for a while. It has for a few days, but if we're going to 145 or so Nvidia, I think we'll see 5% pullback in the market.
It's the time of the year. It's the time of the year. It's the time where seasonally stocks tend to underperform right now. So you have to be aware of that and just and be respectful of it. Seasonality is not everything, in my opinion. But
And look at that RSI. I mean,
uh,
we haven't had a confirmed high since back in December,
yeah, I
and the
mean it's
weekly is even uglier. Look at the weekly
yeah.
RSI.
Yeah, I mean it is, but it hasn't stopped the market either.
No,
We say that.
no.
You can say that every day, but it is ugly any which way you look at it for sure. Hey Ryan, we're way into Dale's interview. Any last minute words before we pass over to Dale?
No, trade safe, everyone.
All right, guys, be good, and we'll catch you in the Forex Analytics chat rooms. Yeah, you want to have conversations with us about everything that's happening in the markets. You can do it right here in the general chat room. You follow along in our trades room. Know when we're adding and taking off positions. Not just us, but other traders as well. K-Man's very active in here through his position. So, all right, we'll see you
Yeah.
guys there.
Okay.
Dale, it's all yours.
All right. Well, thanks, guys, and take Blake's advice so you could have a September to remember. And I have Daniel Hussey Jr. with us, and Daniel, a great time to be talking to you because I've been bringing up corn and the grains, and to me, it looks like the bottom is in, and you have to buy pullback. So, there's different narratives. I think it was when Colombia came in and bought some corn. Corn was already heading up, and now we have news of potential drought in Ukraine in the grain belt. And interested in your views on the grains. I know you follow them closely. Welcome
Yeah,
back.
thank you. And for those that don't know me, I am my name's Dan Hussey. I'm a commodities and futures broker. with Zaner Ag Hedge, with Zaner Financial Services. We're a boutique brokerage firm, full service. We're kind of old school in that sense, right? That we help our clients in a more, I don't know, manual sense, I would say, right? There's a relationship we maintain with our clients. And the idea
You,
is that we get to know what your needs are, whether you're a hedger, speculator, retail, or institutional. There's a level of game that needs to be played by every different player.
okay, how can people be sure you're not an AI agent and a hologram?
Well, yeah, right here. I am with you here in front of the camera, but you can find me at Zaner Ag Hedge, Hussey at Zaner.com, Daniel Hussey Jr. on X. And I'll get you all that stuff on the stuff. But where do we want to begin today? You want to begin with the row crops? I think that's a good place
Yeah,
to kind of
yeah.
start.
I mean,
Why don't you start sharing
people
a screen?
turn. Go ahead. People were so bearish and grains after what we had with tariffs. So that was near the lows. That's how we bottomed. I see
Right.
you have some kind of
It's
virtual. See, you weren't
that's
real.
that's that's
The
the
virtual.
wrong. Right. That's my broadcasting software, which isn't going to work for us today. That's fine. We're just going to do this the old-fashioned way. Which screen do I need? I want screen 3. Yeah, this one will work for me. Share this. Okay, cool. All right, can everybody now see that
Yeah,
screen? That should be
yeah.
a lot
See,
better. Okay,
yeah.
well, let's before we get in, take a deep dive into these row crops, let's start actually backpedaling and talk about where we are with exports on the year. I have the dollar up because generally speaking, the dollar until March of 2025 was actually, well, still, right, when we take a big step back, the dollar's historically very strong, right? When we look at this daily chart going back to 2009, we're still at the top end of the range for the Dixie and have been. So the dollar globally has had, that puts pressure on. Is it now? I can't tell what I'm sharing and if it's
Yeah,
sharing the right thing.
you're sharing the Dixie right now.
It's just a big chart of the Dixie, right? Well,
Yeah,
yeah,
exactly.
it's showing something else. Perfect. Okay. Um, what I wanted to point out though is this big, what looks like a giant 3-wave correction right now, right? You have a big A wave, some kind of B wave, maybe
Right.
expanding structure, real chop, and then maybe we're in that C leg lower. Could this be the start of 5 legs lower? Absolutely. I'm not going to argue that, but we'll talk about this as 3 waves down with the idea being, hey, the dollar has weakened over the last 2-year horizon. The dollar has weakened since we saw that peak inflationary move back in 2022. And I point out to that as peak inflation because that's when most of our row crops really started to top out coming out of the war from Ukraine, all of these
Right.
other things that happened, right? And
Hmm.
by the way, I bring this up because a weaker dollar means, you know, in theory, easier times for global exports, which our row crops rely so heavily on. 80-90% of our soybeans go directly to China, to one buyer. So where the dollar is relative to the Chinese yuan really, influences that one trade when you get down to it as well. So
Okay,
I
so
brought up
what's
here.
your view
Mhm.
on the dollar?
So my view, for the time being on the dollar is that I think bring that chart back up.
Are we
Sorry
going to
if I
make
kind of pushed through that.
one more
So
low, and for a bottom,
so
one
to
more
me,
low?
this does look like we could have some nesting. I would have liked to have seen us take out this 101.80, swing high. Otherwise, this still kind of looks like 3 waves up into
Right,
technically the 100-day moving average, right? This
right.
looks corrective in nature so far, and we're right in the middle of this range that we've been in. In my humble opinion, we're below the 50, 55, 18, and 100-day moving averages. Yeah, today's a little green off the low, but we poked our head below this range low. If anything, we don't get out back above this 97 to 98 area where this cluster of moving averages is. This is a signal that we could be heading lower, right? And look out for another swing low for the dollar below 94, 95. Could we be getting towards the end of a larger 5 wave or C leg of a larger correction lower? But this chart doesn't say to me that 100% we have the bottom in, by the Dixie here
Okay,
for,
all right. So let's
you know,
say, so what you were saying so that people understand that if you look at it as a big ABC, even though it hasn't completed the C yet, that count
A,
would
B,
call for
C.
a major dollar rally,
Correct. Correct. When
right?
this does bottom, right? That's the other caveat of what I'm saying here, right? Which Dale so astutely pointed out was that while I'm saying maybe there's one more low coming in this 5 wave or whatever sequence down in this last leg, Dale's pointing out the bigger picture, which is the larger correction here. When the dollar does bottom here, which by the way is basically into old resistance, this 95 to 100 area now being found as support, on a really big time frame, this could be a major bottom, and you're not wrong. And it will be interesting to see, how this plays out also into our interest rate cycle, which seems to be shifting a little bit. Not to get
Yeah.
too much into rates, but right, we got a rate decision coming up where I'm sure you've discussed with your folks here how the Fed fund futures have been pricing in, at an above 95% chance of a rate hike, and now we're starting to see a 15 to 25% chance of a 50% basis point cut potentially happening. I'm not going to call for that, but that's how the market's pricing right now, right? And so
Yeah.
it makes you wonder that, hey, if the dollar is going to find a bottom here at a time when we just knocked rates off, excuse me, like, wow, there's some real strength there. But hey, rates getting a hit from the Fed, also kind of a reason to maybe see one more leg
Yeah.
lower or some short-term weakness in the dollar. But
Right.
I also point out, I think a lot of that might be priced in. And I think, right, over the last year here, we've literally been pricing in that rate cut, since
Okay.
since March of this year. And if you look at the Fed fund futures, the dollar started to fall along the same time we started to price in a September rate cut about 6 months ago.
Well,
It's
the
just an
dollar
interesting point.
bears, yeah, dollar bears have, which is heavily tilted,
Yes,
dollar bears for a while, like at 20-year levels on a lot of measurements. So
sure.
they get one more low, they're going to end up with hubris. That you'll be, we go to 95, take out that 96 low, it'll be the end of the reserve currency. And there'll be even more dollar bears at that low that would
And
really
and and Dale,
set it
how
up.
many times in your life have you heard that, and not to say that, I think we all understand the nature of fiat is a race to zero, but how many times in your lifetime have you heard the dollar is going to go to zero and never be worth anything ever again?
I don't know, at least 2 or 3 times. Put a few
Just a
zeros
couple,
on it.
right?
Yeah.
Yeah, and it's kind of a joke between currency traders I make because like it's the thing it's the doomsday clock that just keeps on
Well,
ticking, right?
yeah,
Like
and
it's always coming. We just don't know when.
you know what's lost a lot of confidence, and I still think the guy's going to be right, is Brent Johnson and the milkshake theory.
Hmm.
Okay, and
Bring me up to speed.
that's calling when there's stress, people are still going to go to the dollar. And
Sure.
if there's any kind of problems with the debt markets or any kind of financial system leak, uh, wherever it is on the globe, they're going to go the dollar, and that there's really still quite a demand for dollars. If you like emerging markets, I mean, they're still paying their debt in dollars.
Sure.
So there's plenty of demand. And the repo market also has been showing it lately that banks can't get enough at the repo during the repo market, and they've had to go to the window to get
Yeah.
overnight funds. So that to me doesn't sound like a glut within the financial system of dollars.
No, absolutely right. That sounds like we need dollars. That sounds like the Fed needs to lower rates, right? When you see things like that Dale pointed out, when actors and players need to go to a discount window to get liquidity because they can't find it from the open market, that's signals of a problem, right? That's the smoke before a fire. And now we're hoping the Fed gets in front of that by injecting liquidity. And that's the idea of what a rate cut here could do. And like you said, Dale, I think the dollar will still find a flight to safety. And I think, over the last year, even as weak as the yen has gotten, you've still seen these bouts of,
Yeah,
yen strength and flight to safety in the yen too, seasonally.
yeah.
Even as when we look at a chart of the yen, you realize how far up it might need to go at times. And it's still very much in this bull market, but there are still periods of flight to safety, even into one of the weakest currencies, on the street over the last, decade, in terms of it, depreciating. And I just wanted to point that out that, hey, yeah, even in the event that the dollar has these events, you're going to, yeah, even though we talk about it so shamefully, it's still the best smelling pile of doo-doo, right? At times. And that's the thing to remember.
Well, unless you
So,
believe there's going to be a settlement between Ukraine and Russia, um,
which,
I'd like to have a body of water between myself and Europe. And so I think there isn't going to be a peace deal, that there's going to be escalation. So that would also speak to, is the euro really a flight to safety when you have kinetic warfare expanding on your continent? I don't think
yeah.
so.
And I mean, I think that's where I think the euro ends up being an issue, right?
Yeah.
And I think there's also other systemic issues with the euro currency in and of itself. You know, you got too many melding pots, trying to function under one economic umbrella. Europe in and of itself has inherent problems with its economic systems, period. And that's a whole discussion.
Okay.
So, hey, but
All
I
right,
think,
let's talk corn
right, you see the same
while
thing.
we still have some time.
Absolutely.
The
Corn.
other reason, the other reason is I like nat gas down here, and we have smart viewers, so they notice that I like corn and I like nat gas,
So
and
let's,
so he said,
if you
"Go
guys
ahead."
like that, let's look at another thing here too that you might not look at, everyone, which is bean oil. Because if we're
Oh,
liking,
okay.
nat gas down here, which I don't disagree, but I think we can start. What I'm trying to point out here, folks, real quickly, is that beans and corn are energy plays. They're not really food and
That's
agricultural
it.
plays as much as you think. And we're going to look at that real quickly here. So
And
yeah,
natural gas is a big component in fertilizer.
that's absolutely right. So when natural gas prices are down where they are now, this takes a lot of wind out of the cost of production for particularly corn. Soybeans don't need it, right? Soybeans actually put nitrates back in the soil, but corn needs nitrates. And so natural gas over the last couple of years, as it ran up, we saw a positive correlation with the price of corn running up through 2022 because the cost of production went up, right? With the war in the Ukraine and everything else that caused natural gas prices to rise. Yeah. Now that we've kind of come back down to find, we had a somewhat inflationary move and now the markets have deflated somewhat. And we found, I think, the new normal for where supply and demand is, right? Clearly there's supply, or I'm sorry, clearly there's demand on this chart down around the $2.50 to $2 mark. The market doesn't want to go below that. That's great. But there's also going to be when supplies, when we get to that $4.50 to $5 area, supply obviously hits the market and keeps us capped. But for the time being, we have this gap up and go situation. And it looks to me like next resistance is up around the 360 area, right? If this can keep climbing, that, ends up, right, helping with that kind of pseudo positive correlation because, hey, look, if input costs for corn go up, the price of corn has to go up. Otherwise, it's not economically feasible to grow, and farmers just don't sell it. That's the fascinating thing about row crops, folks, is that you can put them into a silo, and if you do it at the
Right.
right moisture and temperature content, it can last for, in theory, indefinitely, but for several years. So farmers that have the
Let's do it.
financial
Let's
power,
do it.
right, they can sit on their crop for a while. So
Let's do
corn,
it.
so
You want to
corn
go
here,
partners on a silo?
I would love to own some land and grow. It's similar to like I think my views on crypto are my views on agriculture. You want to be a farmer. You want to be the guy producing the stuff because that's the best place to be in the whole supply chain, right? Because then
Yeah.
you're not speculating as much. This is a
All right.
daily chart of December corn. So this represents the price of corn after every kernel in the United States has been harvested. It's because we only have one harvest every year in the fall. So we know exactly how much is basically produced. We have a very good reading on how many acres are farmed. We know basically how many plants go in per acre. And we can, within some degree of certainty, guess and estimate how much actual production is made every year. Therefore, if we know what demand is, we could subtract that from production, and we know exactly what the big old balance sheet for how much corn and beans are out there looks like. And if you ever want to talk to me in more detail about that, my contact information, I'll get to you at the end of this. Get in contact with us. We can talk more about that. But what I wanted to point out to you, Dale, was you mentioned that corn could be making a bottom and a seasonal low here. And 392 is actually a very good price to do that at. Below $4 in corn represents where demand is. Just like we looked at that chart of natural gas, when you come down to that level and say, oh, there could be really big demand down here. When we look at a chart of corn, and let me bring up my other program because this does a better chart for the dailies. Perfect. You can see how when we go back over the last 10 years or so, corn demand is down in this 3 to 350 range. And when we go back to corn before 2010, we go back to a market that was pre-ethanol. In other words, this is what corn was. Corn was a $2 to $3 crop, and it would maybe spike to $5 before it became an energy product. When we added that energy demand in around 2010, corn all of a sudden became a $4 to $8 product. And now we are finding this big range and this new kind of normal for the energy product corn, which can literally double its price because of that basically food consumption demand. So when you look at this chart, you say, okay, corn down around, $3.50 to $4 is probably, like, if you could buy it down here and hold it for a few years, you're going to make money on it, is the idea. And that's the mentality we work on with farmers as they make their marketing plans every year. That's what I do professionally on the hedge side of our business, right? To give farmers some notion of what to do and when to do it. So that was a big old.
So then you wanted to show bean oil because that's an energy play too for a biofuel.
Absolutely. And we've seen that driving demand a little bit more here this year. Beans typically are driven more by the meal. But going back here, you can see prices of the price of bean oil here back in 2010 could only get up into the 60s, and it would only ever spike up when there were these short-term kind of crunches. And it was bean oil. When we crush beans, everybody, it was always the bean oil we didn't want. We always wanted the meal, because the bean meal would go and feed chickens, cows, and be used for other byproducts that had value. The oil didn't have any value until we created it and made it into an energy product. And now we're seeing the bean oil chart start to break out above these old levels that we were, the old levels, so to speak, as we have developed and implemented new plans for using bean oil for sustainable aviation fuel and other diesel fuel products. So now that bean oil is starting to become more of an energy product, and certainly shifting from this year, we started to find this low on a chart and started to see this rally in bean oil prices over this last year. So this is last summer to this summer, basically, right? We've gained $20 a barrel in bean oil prices at a time when the rest of our row crops have slumped in price. If you look at the price of beans over that exact same time window, right, over this last year, beans have not rallied at all. In fact, we are below prices from last fall, which were up in the $11 to $12 range. Prices for this fall are now in the $9.80 to $10 range.
Over that 1050 double top, it's gone.
Agreed. Right. You've got a period of consolidation here where the market's saying, hey, we don't like being below $10. And that's fair for the price of beans, in my humble opinion. Doesn't mean it can't go there. In fact, I kind of humbly think it might have that one more flush out to find that seasonal harvest low. Because remember, max supply for soybeans and beans and corn, are about to hit the market over the next month. All of those combines running through the fields, right, are taking their product and hitting market with it. So there is some downside pressure. We call it harvest pressure on these markets this time of year.
When does that end?
Usually, so that's a great question. Every Monday, folks, at about 2 p.m., the USDA puts out a report, the crop progress report. And what it does is it tells you how far along percentage-wise we are with harvest. We're only a couple percent in because we're just starting. Once we get to about 50% complete with harvest on that report, that's when usually harvest pressure, the market has, quote unquote, priced it in. So that's from now, probably about a 4-week window from now, where there's going to be
Yeah.
that harvest pressure, as farmers that are literally running their combines through the field will be selling it right off the back of their combine to an elevator, and
Right.
then that's causing literal sales into the market.
All right. Can we
So
wrap it with the weak sister? We have about 5 minutes left, which is wheat has been the weak
yes,
sister, and why it's been the weak sister, and what could be the catalyst? Could that be Ukraine? Weather in Ukraine that could
two
uh,
things about Ukraine and Russia actually there is yes, weather in Ukraine and Russia, and two is that Russian wheat has never and Ukrainian wheat has never really not been off the market. And that's what we see
right.
every year. Every year there's this kind of run up, right? In a seasonal run up, and every year we still see those supplies hit the market out of the west, out of the east, excuse me. So we just get batter back down. We've had a really great wheat crop and a really good growing year for row crops across the United States. We're looking at having a record crop. Wheat harvest is already done, so we are through the max pressure, which is kind of what this last downturn, in my opinion, was, right? This consolidation sideways is very similar to what we're seeing on soybeans right now, right? We're kind of this listing going sideways, going nowhere. Wheat finally got its one more move lower. I was hoping for some more capitulation, a little bit more of a dramatic bottom, because quite frankly, everybody, I think this chart is way oversold. We have funds that are now oversold in their position. They're not a record net short, but they are short the wheat. So I'm of the camp that I don't think there's going to be much that it would take to get December wheat or September, but I'd be trading December at this point to flip here and just turn a little more bullish. This 18-day moving average is a good short-term line in the sand. I'm bearish below, bullish above that. The 55-day here at 547, excuse me, we can flip that, which correlates with this old low. That would be my reversal signal, in the short term, for wheat, because I do think it is due for that run up to the 200-day moving average, which it's, seasonally tests here every bit, and we're due for that move here shortly.
All right. Great interview, Daniel. Yeah, someone wants to comment on gold. Where do you short it?
Yeah, I was
He's
just gonna. I was about to bring that up before, and I'll finish with actually a quick comment on silver. So gold, I see this, really there's this consolidation period here since
yeah,
March, or excuse me, since May. If you equal legs the run up into that consolidation, we've got an upside target of this, kind of last move that could take you as high as, this 38.80 area. So there's channel resistance up around that area. I think we're getting close, but I'm not one to pick a top per se. This still looks like, momentum could take us higher. The technicals have upside still. But I do think, hey, it's due for a pullback. It's due to test this resistance that it clearly wanted to hold and broke out of. Let's test
yeah.
that as support, right? If it wants to go higher. But this is a very parabolic move. And I want to leave us with this idea for gold, which is it's not over until the fat lady sings. And that fat lady is silver. Silver is finally moving, folks. So watch out. Silver taking out that 2011 high in the 50 area. That to me is the signal for peak optimism, peak enthusiasm, peak,
Yeah.
metals are probably about to top. So, and I'm not saying once it gets there, right? If silver forms a top around there and gets choppy, it's going to be just like it was in 11 and 12, in my opinion. But silver can run here. So watch it
Okay.
go. I mean, I'm not saying it's stopping here. I think it could be a 60 to 75, $80 move. I think you can still
Wow.
double from here in the price of silver, but I do think this is the coup de, or the grand finale for the precious metals, if you will, when silver finally goes.
Thank you, Daniel Hussey. And you can find Daniel on X at Daniel Hussey Jr. And you can find him at Zaner. And you can actually talk to him if you're a client.
Yeah. You can always give me a
So
call too, 312-801-4231. Give me a call if you just want to talk about markets, catch up. I know actually some of you, we've been in contact over the last several years, a few of you out there. So yeah, always love hearing from you all.
sorry about the Bears, Daniel.
Oh, it's what can you do, right?
JJ
It was theirs to
McCarthy.
lose. It
They
was theirs to lose.
can't even beat a rookie in his first NFL game.
They
Anyway,
deserve they deserve that win. That
that
was
was a
quite the
great,
comeback.
yeah. But the best football game of all time was Sunday night, wasn't it? Did you
That was.
see Baltimore and Buffalo? Oh my God.
What a game it
Anyway,
was.
it was as exciting as having a 10 lot of bigs on in S&Ps.
With a
So
one-way ticket to O'Hare.
yeah, I think yeah, I think I did that once. Anyway, thank you, Daniel. See you
Have a
in the
good one,
fall.
everybody. Thanks for having me.
See you in the fall, buddy. Much prosperity to you and your clients. All right, so that's a wrap, everyone. Turnaround Tuesday. Hope it's working for you. Thanks for hanging out with us today. Join and get into the chat room with some pros and up your game. You only up your game by being around people who are more proficient than you, and then you rise to their level. It's a universal law. And that's a wrap. Don't just count your pips, count your blessings, everybody. See you tomorrow. Adios. See you, Glenn.